All right. What's up, guys? I hope you're doing well. James here from jamesforsythe.com. Continuing on with central bank digital currencies. The one thing you have to kind of think about is like, why are central banks kind of incentivized to do this? Like, what are their motivations, right? And there are different kind of aspects, right? Like different kind of, I guess you could say, you can categorize their motivations, right? So there's difference in like the actual payment itself that you can deal with. Um, they already talk about problems with like cross-border payments, for example. There's also like monetary policy motivations, other uh, how to say it, um, their goals and stuff that they state, like price stability and employment and stuff like that. For you, as using the example for the Federal Reserve for their mandates, right? So you have financial stability and stuff like that. Balancing between different jurisdictions and stuff. There's multiple different things that you can go into. We're going to focus specifically on the payment aspect of it for this video. So what exactly is their kind of incentive or what motivates them from a payment perspective, right? So we'll head over to the screen share. And again, um, these sources are straight from the central banks themselves. This is done by a study from, let me make this bigger so you guys can see it better. Okay, from like the BIS and nations and the world's central banks. So like the Swiss National Bank or whatever they're called for Switzerland, the Board of Governors for the Federal Reserve, the ECB, Bank of Canada, Bank of Japan, and a few others that come to mind. Um, but yeah, so what's their motivation, right? And specific to payments, right? And so one of their kind of ideas for this is that it would have continued access to central bank money, which they kind of deem as an obligation for them to have to provide public access for money, right? And that access could be crucial, for their own words, for confidence in a currency. Without public access to a currency, the public is obviously not going to have confidence in it. Um, and then a CBDC could act like a digital banknote and could fulfill this obligation, right? Essentially, the central bank would force confidence in the currency, right? You could argue that they kind of do that now with cash. There's various other things and why confidence in a currency is necessary to begin with. I think stems from the fact that it's 100% faith based. Our system is currently based off of credit, and so I don't think that's anything new. You even look at the face of a dollar bill, it says the full faith and credit of the Federal Reserve. I believe I will actually fucking look at it. So it's a Federal Reserve note, and let's see, it's on the back. But yeah, it's for the full faith and credit of the United States, right? And so there's that. Another thing that you would have to have is resilience, right? And so cash serves as a backup payment to electronic systems if those networks cease to function. However, if access to cash is marginalized, it will be less useful as a backup method if the need arises. A CBDC system could act as an additional payment method, improving operational resilience. So, say, like, basically adding another backup to the current central bank, or not central bank, but like commercial bank system with your deposits. So, like, if something happens with a commercial bank, say there's a bank run, or just something happens and software breaks or whatever. I don't know, whatever happens, and you can't really. There's a problem in the banking system in general. Some form of liquidity freeze, whatever. A CBDC could help kind of back that up while it's down, right? And so they argue that it could help improve resilience in the system. However, it also introduces another mode for I guess, counterproductive to resilience, right? So it would depend on how they implement it itself and how the security aspect of it, because they even say defending against cyber attacks will be made more difficult as the number of endpoints in a general purpose CBDC system will be significantly larger than those of the current wholesale central bank systems, right? Basically, the ways you could attack the system itself would increase if it was more of a generalized thing, like a central bank digital currency that individuals could hold themselves, right? There's that. They talk about increased payments diversity. Um, Pretty much it. I think that one's pretty self-explanatory. So a CBDC could provide a common means to transfer between fragmented closed-loop systems. Although an accessible fast payment system can also achieve this to the same end. It encourages financial inclusion. That's one of their go-to things, and they talk about the complexity of the issue itself and how they could do this, and that would have to deal with how they implemented itself because they bring up illiteracy on how that could be a problem. Also, I think they talk about technological illiteracy because I mean you have to somehow get people to transact this thing. So if it's like literally them tapping on the phone or tapping their phone on something or having like a digital like a credit card thing. I think they talk about later, to where there's certain things like it's a card that you have that you tap onto things. I think we have some more things to that now. Um, and then there's other things, maybe like a taser. I think like you could have for crypto, um, to where it's kind of like a digital like wallet specifically for that use. But it also has to be simple to use because some people might not be able to use it or whatever. There's other things that they have. Another one is improving cross-border payments, and there's an entire box on that one specifically, so we'll kind of hold off on that one. And then supporting public privacy. They talk about how basically for it to be fully anonymous is not plausible. And so while anti-money laundering and combating the financing of terrorism requirements are not a core central bank objective and will not be the primary motivation to issue a CBDC, central banks are expected to design them to conform to these requirements along with any other regulatory expectation or disclosure laws, right? And so a CBDC would not be fully anonymous, kind of like cash is now. I mean, besides like maybe taking your fingerprints off of cash, but it's also like it passes so many hands. I'm not sure how plausible that would be. Um, I don't know. It would not. It would be easy to track relatively, right? And you could argue there would be ways to mitigate that, but there's also like it depends on how they implement the system and the structure in terms like the payment system itself. So like is it centralized with one entity in terms of like the ledger being on one entity's kind of control, or is it going to be more like a decentralized ledger where we see like with Bitcoin where it's different, right? Okay. So with CBDC and its system, payments data will exist, and a key national policy question will be deciding who can access which parts of it and under what circumstances. Again, so how is the system itself going to be? It would facilitate fiscal transfers. What is this? UBI, Universal Basic Income, was the first thing that popped to mind, right? And so a CBDC system with identified users, basically an example, a system linked to a national digital identity scheme could be used for the payments. Essentially, they know everybody, they have everyone's information and everything you do. Possibly with some nuances in there, maybe, right? So there's that. Continue on. So, although a CBDC could play a role in making fiscal transfers more efficient, especially in jurisdictions with greater unbanked populations. I cannot talk this morning for some reason, but on its own, it would not be necessary or sufficient. A linked digital, a linked digital identity system would be a necessity to realize real improvement, right? So basically, in order to do these fiscal transfer payments, kind of systematically with a central bank digital currency, they would have to have this kind of centralized identity system to where they know everything, right? And so, additionally, if fiscal transfers were made with CBDC, there is a risk of blurring the division between monetary and fiscal policy and a potential reduction in monetary policy independence. So, essentially, combining the Fed and the Treasury with the example of the United States, right? And so, that's one of the kind of there's an argument that basically keeping the monetary system and the fiscal system, we'll say the government, separate is important in a capitalistic system. And that's one of the first things that they did in the Soviet Union, I believe, was they combined essentially the central bank, private banks, and the government to where it was essentially one entity. You had one kind of central bank ish with different branches, and everything was controlled centrally. And so that's one of the whole risks that arrives from doing this sort of thing. It's kind of more of a seems like a more of a socialistic kind of lean, um, but definitely something to think about more. That comes to mind. They didn't go too far in depth with this specifically, but that's something I kind of want to look into more specifically later. But, anyways, on to cross-border payments, right? And so there are various ways this could be implemented. And so a domestic CBDC could be used for payments from, to, and perhaps even within another currency area. This could facilitate efficiency, but may also create risks for the foreign jurisdiction. So this is where the big argument on interoperability is kind of comes into play. And so it's kind of broadly understood and basically potentially covers a multitude of different ways payment systems or arrangements can interact with one another. So how, for example, like how well does say the US dollar system and digital system in this case would operate with the euro dollar system or the euro system itself, not euro dollars. Um, but just kind of keeping those separate and how would they interact with one another? Kind of much like the foreign exchange does now, but how do you kind of centralize that in a digital currency format? Like, would it be different? Does it have to be different? What does that kind of show up as? And so some of the examples I give for interoperability would be reducing the barriers for membership for both systems, right? And so it's easier to get into both systems. Basically, common messaging standards. So there was an example of this would be I'm drawing a blank Swift, the Swift system. So something along those lines. Um, Also overlapping operating times because it's not the same time in every country. People go to bed at different times along the world or around the world, and so that's also a common problem. So business arrangements, stuff like that. Having a designated settlement agent between jurisdictions, whatever. So there's that. Um, so let's see. Basically, having the foreign countries collaborate with one another. So that's another thing to talk about later. Essentially, maybe a possible um, solution to this would be instead of having a global digital currency, right? Is one thing that is brought up. And again, problems with that as well. At least they talk about it. And but it's something to note. Essentially having kind of a internationally based digital currency, maybe like, the Bancor again, going towards that kind of thing. Um, but yeah. Anyways, so similarly, if CBDC systems are linked with supplementary systems and data services, so like the digital identity repositories we talked about earlier, then basically international standards may be required for seamless cross-border payments, really collaborating between countries and making it an international effort, which may not be too far from it may not be too far of a stretch, considering that 80% of the world central banks are at least investigating it, and I believe half of them have actually done some form of experimentation or pilot programs to some extent. And this is a stat that's listed earlier in this same paper, and I also talked about it in the previous video if you want to look at that one. So, and that was what CBDC explained, and just kind of the basics of it. We talked about that. So, again, different legal and regulatory frameworks present a significant obstacle to cross-border payments. Harmonizing these frameworks would be a challenge. So, different countries have different legal frameworks, different regulations, and so on. And so that would be a hurdle that has to be come across, or at least jumped over. So, and then, I mean, people travel. So tourists and foreign travelers, how are they going to incentivize them to use this? How are they going to do it? That's all part of the implementation and kind of design in general of what it could be. So, and then also one thing to note with this is if you do have this sort of system, so what kind of spillovers could happen and unintended consequences? Because that's one thing you have to keep in mind is you're not going to think of everything. Doesn't matter how smart you think you are, you're not going to. There's always going to be something that pops up that you didn't foresee, right? So how are you going to take care of that, right? And so one of the things they say specifically is undesirable volatility in foreign exchange rates, right? So basically, a digital dollarization for other countries, right? That we kind of saw with the U.S. dollar happening, how it's currently the global reserve currency, and so on, right? So kind of the same thing happening, but with central bank digital currencies, which kind of backs up, I guess, the need for, or at least the proposal for, I should say, a kind of global central bank digital currency or whatever. Maybe it's run by the IMF. I don't know. I mean, this paper is one of the authors, or I guess participants of, is the Bank of International Settlements, so BIS. And again, like always, I'll link it, the actual paper itself, in the description so you can read it if you want. I highly recommend. It's only like 26 pages. It's not too bad. This is also only the first report. There's multiple others, so we'll get into those later and in the future. But I'm going to leave this one there. So I hope you guys have a good night, and I'll see you on the next one.